most trustless name in news.
Well, inflation came in hotter than expected, and just in time for the Bitcoin halving. Bitcoin dumped, and many people are getting scared of what is to come in the future. Well, let me calm you down a bit. The future is bright. Trillions of offshore dollars could be looking to flood into Bitcoin ETFs starting this month. You heard that right, trillions, because it's time for Chico crypto.
Coming in hot.
Yeah, inflation came in hotter than expected yesterday. For the month of March, inflation rose to 3.5% year over year, while the expected rise was 3.4% for the US. Looking further into the data, we can see inflation rose by 0.3% from last month because in February it was 3.2%. So the estimate was to rise by 0.2%, but we rose by 0.3%. This is the hottest inflation reading, the highest it's been since September of 2023, when it was at 3.7%. And it's the highest month-over-month jump since July of 23 to August of 23, when it jumped by 0.5%. So we could be destined for some turbulent times ahead. But I personally think this reading is nothing to worry about. We just have to look at what happened back during these readings in 2023. The hot August 2023 reading came in September 13th. And as we can see, the headlines for it were very similar to what we saw with yesterday's reading. It was hotter than expected. The core CPI increased 0.3% against estimates for 0.2%. Yeah, very similar readings and headlines as to what we saw yesterday. So now the question is, what happened to the Bitcoin price during this last time? Well, checking out the price chart, September 13th, 2023, when the reading came out for August, it was just a slight dip. Then the price actually slowly rose throughout September before blasting off in October. I smell a similar thing happening this time around. By next week, we are going to forget about this inflation reading due to some very important things. Of course, there is the Bitcoin halving, which is estimated to take place just a day before 420, man, on the 19th. Although we've already had our pre-halving pumps, so I believe it's going to be something else that will get the markets back on track. So what is it? Well, we can see from this CoinDesk article, next week Hong Kong is set to approve their first Bitcoin ETFs. The article states, Hong Kong regulators are likely to approve the first set of applications for spot Bitcoin exchange traded funds next week, making it possible that the products could be ready to start trading in April. Hong Kong regulators have sped up the approval process. I wonder why. We'll get into that later. So who is launching the first Bitcoin ETFs in Asia? Well, the article continues. The Reuters report said 4 entities have submitted applications to launch the spot Bitcoin ETFs. It named 3 of them as the Hong Kong units of China Asset Management, Harvest Fund Management, and Bosera Asset Management. This could definitely be that spark that gets the markets moving once again, because this means mainland China is going to be able to invest in Bitcoin ETFs. If you didn't know, these are all companies from mainland China looking to launch these ETFs. Why mainland China investing in these Bitcoin ETFs? Well, from this report from the Hong Kong Monetary Authority, we can see they say Hong Kong originates and intermediates 2/3 of China's inward foreign direct investment and outward direct investment, as well as most financial investments. Hong Kong enjoys unique access channels for cross-border portfolio investment flows to and from China, including Stock Connect, Bond Connect, and the mutual recognition of funds arrangement. Now let me explain why this China getting into Bitcoin ETFs isn't just kind of bullish for Bitcoin, but mega bullish, because Chinese investors are looking for a life raft, and Bitcoin could just be that raft they need. China currently faces a significant economic downturn, exacerbated by a soaring debt-to-GDP ratio, which hit a record 288% in 2023. The former rapid rise of the Chinese economy was fueled by record levels of debt and mainland investments in real estate that are no longer performing. Housing sales have plummeted by a third from their pre-pandemic highs. This Reuters article states, total sales of 100 surveyed real estate enterprises dropped 33.3% year-on-year by value in January, outstripping the decline a year earlier by 1.6 percentage points, according to a separate survey by the China Index Academy. And new construction is down 60% from the highs in 2019. This article states, about 693 million square meters of new homes started construction last year, down 21% on the previous year and nearly 60% from a 2019 peak, according to data from the National Bureau of Statistics. This figure dropped 40% year on year in 2022. Money was being made hand over fist with real estate in China for years, but now that party is over. This became well known starting with the default and bankruptcy of Evergrande, but this has now spread to other major real estate developers like Country Garden, Kaiser Group, and Sunac. The real estate sector's struggles will affect the Chinese economy for years to come, and the investors in China know this very, very well. So where do you think these investors will go? Well, they could try the traditional Chinese market, but the Shanghai CSI Index and Hong Kong Index ended 2023 down by 11% and 14% respectively, in a period where the MSCI World Index rose by 22%. You can see this when you compare the Shanghai Index with America's S&P 500. Both crashed with the pandemic, but the S&P has recovered and boomed, while the Shanghai Index has continued to plummet. The Chinese can't trust their own stock market to produce gains, thus they are looking for outside investments. Just look at what Eric Balkunis, senior ETF analyst for Bloomberg, is saying about where Chinese investment is going in the ETF space back in February. He said, craziness. Chinese investors are stampeding out of the local market and into US-focused ETFs, creating record volumes. Problem is there's a quota, so they're buying in a premium of up to 43%, which has government-issued warnings, but no one cares because the US FOMO is that bad, with the data and chart to prove this is happening. Then just a few days ago, Eric tweeted this: more wild stuff in China as local investors pile into a gold stock ETF, pushing its premium to 30% and forcing it to halt trading. Investors there are so desperate to buy things that are not linked to their own economy or stock market, which has been in the gutter, also with the data to back up the claim. China is piling into gold ETFs to escape the pain their economy is seeing. So Hong Kong authorities, who make up a majority of China's trading, are concerned about further losing the region's appeal to investors, and they are scrambling to find a way out. They are now looking for a savior, and Bitcoin is that savior. Bitcoin ETFs specifically, and the Hong Kong Bitcoin ETFs could be something special. Eric tweeted this back in March regarding the Hong Kong ETFs. He said, looks like Hong Kong is going to allow in-kind creations and redemptions for spot Bitcoin ETFs in Q2, unlike US, which is cash creations only, which could help spark assets under management and volume in the fast-growing region. What is an in-kind creation for the ETF? Well, from this explainer from ETF.com, it says, in an in-kind process, authorized participants exchange a basket of underlying securities with the ETF issuer to create or redeem shares, fostering tax efficiency and minimizing transaction costs. Yeah, baskets of securities could be used to create or redeem shares, which could open the ETF floodgates even further for Hong Kong. Remember, Eric said the United States is cash only, but there has been net inflows of cash of $12.37 billion since the ETF launched in the United States in January. If you didn't know, the Hong Kong total market value of their securities tops out at over $31 trillion in 2023. These trillions could be used to create or redeem shares in Bitcoin ETFs. In my opinion, the floodgates are going to be open next week. Don't worry about the Bitcoin crash and inflation numbers. Bitcoin is a honey badger of money, and the world will run to this badger. Cheers. I'll see you next time.
The most trustless name in news.